Hey guys, what's up? How's it going? Robin here. Welcome to week number 27 of the dividend investing case study. If you guys are new to the channel, this is a weekly update that I do where I basically show you guys my dividend portfolio that we built from scratch on this channel, and I show you guys what stocks I'm buying, I show you guys how the portfolio is doing, and of course I show you guys how much money we've earned along the way. And this is kind of a case study just to show you guys how easy it is to get started with investing and how easy it is to build a passive income stream with dividend investing. So if you guys are new to the series, you guys are new to the channel, be sure to hit that like button if you guys enjoy the video, and don't forget to subscribe to the channel. So I'm using Wealthsimple Trade here because I'm based out of Canada, and here's our tax-free savings account that we actually have our dividend portfolio in. And I actually have two kind of dividend portfolios. I have one that's 100% dividend stocks. They have another one that's REIT stocks based off real estate. So we'll go over the dividend portfolio first, guys. I'll show you guys what stock I'm buying, then we'll jump over to the REIT portfolio, and we'll kind of see how that one's doing too here. So here's our portfolio here. We have $2,776 right now, and if I go over my kind of reports here, over the past day we are down 0.51%. So that means in the past day stock markets have went down about 1% or so. Over the course of 1 week we are up $42, which basically tells us that over the past week the stock market has gone up. And I can actually tell you that the past couple days actually the stock market has gone up. So maybe it's a couple stocks in our portfolio have gone down, but I do know our Wealthsimple Invest portfolio has actually gone up quite a bit, like a couple percentages in the past couple days. So it's kind of interesting how you can have two different portfolios and one will go up and one will go down depending on what you hold, right? Over the past month, our dividend stocks are down 6%, so that's quite a bit. Once again, the market has recovered, but it's still kind of going back down, like doing that up and down kind of thing. And over the past 3 months, we are up 2%, and of course, if we go all time, we should be down about 3%. So we're still down a bit from when everything crashed right about here. I think this is when in early March everything kind of went down, and then through regular deposits, me putting money in on a weekly basis, we've kind of somewhat leveled off here. So if you guys don't know, I basically every single week I post an update on here, and I put about $100 into the portfolio per week. And here's the stocks that we have here. Most of the stocks here are Canadian based. In fact, this portfolio and my REIT portfolio are almost 100% Canadian based. So that could be why these stocks haven't gone up that much over the past couple days, because it could be that it's mostly US stocks going up here. But I'm not going to show you guys the entire portfolio in this video, because if you guys want to watch it, you can watch some of my older videos. But just so you guys can see, there's a lot of like Canadian bank stocks, Enbridge, Manulife, just a lot of good Canadian companies here. And then we have a few ETFs at the bottom here. And yeah, we have about $100 kind of waiting to be invested for this week. So the stock I'm going to be buying for this week is going to be one that I've bought before, and we're going to kind of do a stock that I think is going to be doing well, and it's going to be kind of boring because I know I talk about the stock a lot, but the stock that we're going to be buying for this week is going to be TD. TD stock is a Toronto Dominion Bank. It's a Canadian bank if you guys aren't aware. They are one of the best banks I think right now. They have a nice healthy dividend, and they're just, I think going into the future, they're going to be one of the better performing Canadian bank stocks. You can see here right now, since we started investing in TD, we are up about 6%. So they have risen, and I still think they're at a good price, even though they have recovered a bit since the pandemic. As you guys can see here, I still think TD is a pretty good price. So I'm going to be putting about a share. I'll probably be able to invest about a share once my deposit goes through, because it is about $60 Canadian. So we'll bring that up to 3 shares in our portfolio. We're just waiting for that transfer to go through. We do have $16 today, so we could buy an extra stock we have. We'll just try to take a quick little peek in here and see what we have that we can buy for 16 bucks here. We have TransAlta Renewables. We could buy one of those. Let's see if we can buy 1 share of this for $16 just to use up the extra money we have in our tax-free savings account. And then when my transfer goes through, because there is a delay from Wealthsimple Trade, I'll use the rest just to buy TD for this week. So I'm going to buy 1 share of that. We'll skip that, and there we go. So we have one share of TransAlta that went through. So that should be good for the dividend portfolio. Let's check out the dividends that we got for this past month or so. We go filter here, and we go tax-free savings account, and we'll set that the notification. And here is our dividends over the past. Oh wait, that didn't work. Filter dividends, tax-free savings account. And like I mentioned, this isn't a tax-free savings account, so everything we earn from this portfolio will be 100% tax-free. So as the dividends grow and as they compound and stuff, they will be 100% tax-free, which is the best thing of all about investing in a tax-free savings account. If you don't have a tax-free savings account, be sure to get one. So here's our portfolio for June. I do have a spreadsheet where I'll show you guys in like towards the end of the video that has our monthly updates and whatnot. But here's the dividends for the portfolio. You can see here we got one from Enbridge for $1.62. June 2nd, we got from ZWC, which is the Bank of Montreal, 88 cents. And then we got a nice big one from VDY, which is a Canadian high dividend yield ETF, Canadian stocks, $2.35. I think that's like our biggest dividend so far. So you can see they're starting to kind of rack up, and this is all from just our dividend portfolio. You see like $1 here, $1.40 there, $2 here, $1 here, $2 there. You know, it really starts to add up at the end of the day. So the portfolio is starting to grow. So that's the dividend portfolio, guys. I hope you guys enjoy that. Let me know what you guys are buying in the comment section of this video. Let's jump over to the real estate stocks and let's see how they're doing. Alright, so here's our real estate portfolio. Once again, we're using Wealthsimple Trade to build out this portfolio. And this portfolio was basically made to see how real estate could perform over the long term, side by side with dividend stocks and just any other type of investment. And I wanted to make this portfolio completely real estate stocks so we could separate it. We could see how the real estate stocks overall performed in conjunction with everything else. So here's our personal account. We have about $1,818 in this portfolio. And we are, over the course of one day, we are down 0.85%. Over the course of 1 week, we are up 2.4%. So some of our REITs have risen up over the past week, which is nice to see. Over the past month, it looks like the data for some reason isn't available. Maybe Wealthsimple Trade is having some issues here. But we can go all time and see that we are down about $8, 0.5% overall. So this portfolio is doing a little bit better than our tax-free savings account, but that's only because we invested in this one a little bit later on. So we missed a little bit of the crash, but we still kind of caught a bit of it. So that's just kind of the way it is. And you can see here we have a bunch of different REITs here. We have ZRE, XRE, VRE. Those are all ETFs. Then we have RioCan, H&R, and then Brookfields. So two REITs I'm going to be buying for this week are Brookfield and XRE. So if you guys don't know, I did a video about Brookfield. I think it was a video or two ago. This is one of the most undervalued REITs in Canada, I think, and it has gone up a little bit over the past little while. Since I did that video, we can see it jumped up a little bit, but I still think it's still pretty undervalued. It's a good solid REIT. They have a good, nice dividend yield, and I think as long as things like the economy starts to kind of recover, I think they'll do well going into the future. In fact, I do think most of these REITs will kind of recover. It just kind of depends on the economy and stuff like that. They might take a bit of a beating in the shortfall, but I do think going forward, most of them are going to do quite well. So the price of this one right now is about $15 Canadian, sorry. And in our portfolio, we are up 13 or 14% overall. So kind of crazy, actually. Actually got a nice little jump over the past while. That's quite a bit, actually. So I'm going to probably put about 5-6 shares into Brookfield this week. And then I'm going to buy some XRE because XRE is a ETF, a real estate ETF based out of Canada that I bought a little while back. And it's down quite a bit right now. It's down about 6%. It's a solid ETF, but I'm going to buy it because it is a cheaper price right now. So I'm going to split my $100 deposit from my REIT portfolio into XRE and Brookfield property partners for this week. And I think that's what we're going to do with the REIT portfolio. And if we check for the dividends for the REIT portfolio, I'll just go over here really quickly, go personal, go dividends, and we can see here the different dividends in our REIT portfolio. So once again, you know, it's slowly starting to add up. You can see that like ZRE $1.26, H&R $1.67, XRE $1.29, VRE, and it just slowly starts to add up. But we'll jump over to the spreadsheet right now, and you guys can see how much money we've actually made for these portfolios over the past couple months. So first of all, if we check out our dividend investing case study, we can see here that this is our dividend portfolio first. I did update this for June. I haven't updated the July dividends, but they've just started to roll in over the past couple days, so I'll do that next week. But as you guys can see here, in the first month of the dividend investing case study portfolio, we made 44 cents, sorry. And then the second month we made $1.61, and then the third month on the first quarter we made $4.35. Then April we made $5. And then May we made $7, and then in the second quarter we actually jumped up quite a bit here. We made almost $13 in dividends. So once again, I want to point out that I know this doesn't sound like a lot of money for a lot of people, but you can see like the jumps here. And keep in mind, this is just $100 a week, so that's $400 to $500. Some weeks I put a little bit more. $400 to $500 a month that we've invested in dividend stocks, and on the 6th month we've already at $13 a month that we're making, kind of thing, and we're reinvesting those dividends to earn more and get that compound interest going. So you know, it's not going to be much in the beginning, but it is going to add up, you know. And our total dividends for the entire portfolio since we started all together is $32. So we made $32 in dividends. And I know like you're going to say like, well, that's not how much we totally made, because like the stock portfolio goes up and down overall. We're kind of ignoring that because we're investing into long term. Like these dividend stocks, we're going to hold until the day I die, basically. So I don't care about the stock appreciation right now. I'll care about that like 5 to 10 years from now kind of deal. Right now, I just care about the dividends and those dividends growing consistently. That's the main thing, right? So that's how the portfolio is growing. So $32 after 6 months, not too shabby in my opinion. And then if we go over to the REIT portfolio, once again putting about $100 into REITs per week, we can see here that this one is starting to grow too. So first month $1.29, second month $2.28, third month $4.36, and then in the fourth month we made $6.75 from our REIT portfolio, bringing us a total to $14.68. So you could add up the two together, like you could add the $6 to the $13, and then you'd get like 18, almost $20 right there. So you could add that if you want, but I like to kind of keep it separate. And the dividend, like this study basically started with the dividend portfolio, and then I wanted to keep the REIT separate. So, you know, I kind of combine them together in the videos when I update them just to make it a little bit easier to follow. But, you know, I kind of like to keep it separate, and the main focus is on the dividend portfolio. So that's pretty much it for this week, guys. Let me know what you guys think in the comment section. If you guys are new to the channel, there is an entire playlist you can watch from when I first started this case study. I'll link in the description of this video. You can watch the playlist if you want. You can see how I built this portfolio and how I've learned how to do dividend investing over the past couple months since I started earlier this year. But anyways, guys, let me know what you guys think in the comments. Thanks for joining me here today, guys. Give the video a big thumbs up if you enjoyed it. And take care, guys. And I'll see you guys later.